Okay, everybody, here we go. It's me, Gregory Mannarino. Friday. It's exhausting. I'm exhausted. Friday, August 4th, 2020. Watching what we witnessed today is literally sucks your skull. I don't know. It's just exhausting. It really is to see this, but this is exactly what you and I have pretty much been expecting to see. I've been, maybe kind of looking like a fool sitting here telling people that I don't think the Fed's done. I think they're going to intervene. Um, you know, it, and guess what happened today? A miracle. A miracle. The U.S. 10-year yield dropped 15 basis points today. 15. Do you know what it would take? Do you have any idea what it would take to push the 10-year yield down 15 basis points like that in one day? And then to watch the dollar reverse and go lower. This stock market, all over the place, triple digit loss, triple digit gain. And then we finished lower pretty much across the board. This lighting sucks. Unbelievable. But that's I guess this is the way it's going to go. I bet those of you out here who are paying attention were laughing. You're laughing. We had the MMRI right now. The last time I just looked at it, 256, 256. How many of you, with a show of hands, is going to be shocked at all to see the MMRI drop below 250? We've seen. Do you know how many times we've witnessed the same thing? Over and over and over and over again. It's an incredible thing. Every time we break that 250, oh no, oh no. Look, granted, I understand that the Federal Reserve is probably not watching the Mannarino market risk indicator. They certainly might be, okay? What the Fed does look at every freaking day is the U.S. 10-year yield and the relative strength of the dollar. So they might as well be looking at the MMRI because those are the two key components. This market wanted to see some action here. Look at the video I did this morning. Confidence. This market runs off of one thing. Again, it's in la land. It's in la la land. Beyond la la land. I mean, we're in a place where no man, no freaking woman has ever gone before. All right, way beyond la la land, yet to be defined land. Okay, and this market was not liking what it was seeing. Okay, it was sending a message right to the Federal Reserve: do something, do something. If the Fed did not act, and I covered this from days and days ago, this whole thing was going to get really, really freaking ugly. Now we have the 10-year yield 4.2 just yesterday, 4.05 right now. That is direct intervention here. Direct intervention. Thank you, Autry. I appreciate that. All my friends are here. Thank you for being here. Even Jerome Powell is here. Geo Ryder, Magic Mika, Lava News. My friends are here. Perry. Thanks, everybody. Goulstein, LaGargoyle, LaGagoyle. Yeah, she's here too. But I mean, come on, people. I mean, how many of you were you laughing? How many of you were laughing today? Laughing. I mean, the Fed needed to act, and they needed to act now with that 4.2 on the 10-year, with the dollar going stronger. Ba 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 ba. I mean, it's crazy. It's crazy. And even with that, the market gave back every single one of its gains. So what's the message here? Let me explain this to you. Okay, you and I need to speak market language. This whole thing is a symphony. It's a language. The market talks to the Fed, and the Fed responds. The market today got off, and I mean orgasmically, all over the place when it watched that 10-year yield drop that 15 basis points here, and then it just turned around. Why? The market wants more. The market in some ways has a gun to the head of the Federal Reserve. The market understands that the Federal Reserve is going to prop up this market, create even more distortions across the spectrum of asset classes, none more so than this. The multiples that are being paid right now that people are willing to pay to own shares of stock in XYZ company, whatever, are frankly ridiculous here. It does not make sense in a global economy that is cratering at its fastest pace ever. I mean, by their own numbers, with this fantastic GDP number, you remember that came out earlier this week, and you had the mainstream media, orgasmic all over the place. Even with this 2.4, we're not even keeping up with the rate of inflation that they're telling us. So make it up. I dare someone here to make it magic, to make it up. You can't do it. It's impossible to do. Yes, there is no market. This is some other yet to be defined entity, and it's just too much. But anyway, so again, a wild ride in the market because of this dropping, and I mean dropping 10-year yield, reversing the dollar. Crude oil, are you watching crude oil? All right. How many of you are surprised to know that we are firmly above 82, probably going much higher from here, especially if they manage to weaken the dollar? Again, crude oil is priced in dollars. And I sincerely believe we're going to see the dollar on a relative strength basis fall. I sincerely believe we are going to see every freaking central bank issued currency on a relative strength basis fall, but the dollar will remain the prettiest belle at the ball for now. It's out of control. It's out of control. Cryptocurrencies got hit pretty much across the board today. Gold put on a slight gain, silver flat. That's pretty much where we stand with this whole freaking thing here. It's just, oh, it's wild, man. I'm telling you. I was like sitting here just prior to doing this video, and I was exhausted. I'm like, how the freak am I going to do this? I will play guitar, just not right now, man. I'm tired. I haven't even been practicing as of late, honestly. I've been slacking. I was playing a lot, and then this move here from Vegas to here in Sarasota, this Airbnb, I got it all set up right here, but I've been slacking it. Anyway, so let's talk about a few other things that what we can expect to occur. We know for a fact, okay, we've seen the Federal Reserve followed by the European Central Bank, followed by the Bank of England do the exact same thing in lockstep, raising rates 25 basis points. Okay, lovely, fantastic. We know what's behind this. This has nothing to do at all with stopping or even slowing inflation. All this is, you know this, and I'm going to tell you again, they're cutting off the availability of credit, especially to small businesses who need the credit to function. The large corporations don't need it. This is to fulfill the corporate agenda. They're also making it very difficult for the average guy or the average girl to get a loan. Okay, it's very difficult. This is part of the scheme or the grand plan of central banks to create the extreme haves and the extreme have-nots that you and I have spoken about. So that process, looking forward, is not going to stop. As a matter of fact, that process is going to accelerate. A couple of other things are going to accelerate. You're watching energy. You're watching crude oil. I know you are. Again, do yourself, forget about me, do yourself a favor and look up how many products are made with crude oil. The surge in crude oil, not only are your energy costs going to go up, but your cost of everything is going to rise, period. Food inflation is going to continue. As we know, we've talked about this for I don't know how many months now. Food inflation is going to outpace everything. They want people hungry. They want people desperate. We are going to see, looking down the line, I think most people are going to agree here, the system, the way it's been run now into the ground, is creating slaves to the system, as you and I have known about. I don't know how many freaking years we've been speaking about this. Okay. More people who are dependent on the system. This is what they're doing. And all of this is going to get worse now, being that we have seen over and over and over again direct intervention by the Federal Reserve every time that MMRI crosses 250. Wow, getting dark in here. Thank you, Peter. Peter, you can count on this again. I believe sincerely that we're going to see this kind of action until the elections, at least. All right. The distortions, the fakery in the market is going to be beyond, and then beyond. Again, look, the market is not, if you've noticed, I know you have, we are not allowed to have pullbacks. We are not allowed to have corrections. The market is only allowed to do one thing, and that is go higher. A lot of this has to do with the presidential selection cycle. You all know that too. Crazy. Absolutely freaking nuts here. What a move today. A 10-year yield dropping 15 basis points. I think that's significant. And if you don't think so, then I think you don't know what you're talking about, quite honestly. Exactly. Jobs numbers don't matter. The economy in the freaking toilet doesn't matter. Rising inflation nothing matters to this market. All it matters to the market. Again, there used to be a time, and you know this, we've talked about it a million times, where the market, there was a direct correlation between the stock market and the economy. It's gone. It's gone. When you have this kind of a situation and you can see the intervention in your freaking face, this is what the market was looking for. Now, the market is sending a message to the Fed. The market has a gun to the head of the Federal Reserve saying, do more, or we're going to fall. That's what's going on here. This is a language. The market is talking to the Fed, and the Fed will listen. The Fed will listen. The market knows it. Period. That's where we're at. So everything is about to dip. Yeah, we'll see about that. Doesn't look like that anymore. Not for a long time. We don't have a real market, so don't rely on technical indicators or even fundamental factors anymore. If you realize, after seeing the action we saw today, after the video I did this morning about the con job, the confidence job that you all knew, you and I really honestly said they were going to do something. They were going to do something, and they did, and we got to see it. We called it. I wonder who else called it. All right, people, pretty much that's all. I don't know, man. Josh, why do you think it's crash time? Outline for all of us here, Josh, why you think it's crash time, because I think we ain't even close, because the real crash, Josh, is going to begin and end in the debt market. Has nothing to do with the stock market. If you understand, Josh, the stock market at all, you realize that the driver here is the debt market. The stock market does not act as an independent entity. You understand? It doesn't. It gets its drive from what's happening here in the debt market. That's it. There's no other driver here. Who's running the debt market? Who's buying it all? Who's pumping it all? I'm going to give you one guess, and you better get it right. It's the Federal Reserve. Period. Anyway, no, I am not licking any silver. I told you I didn't even have it here. I used to have it all over my desk. This is just a temporary little setup here for me. People, it's Friday. So I'm going to leave you off with my favorite thing. Let's do this together. All right. I want to see you actually post this. All right. As I'm doing this, I want to see you post this. All righty. Let's do this on 3. 1, 2, 3. Love each other. Care about each other. Be charitable. Okay. This is how we're going to get through all of this. I'm going to ask all of you for a favor out here. Those of you that do believe in a higher power. My sister Lori was just diagnosed with cancer of her bile duct, and she's in for a hell of a ride here. She's got to have some major surgery done here, major surgery, something called a Whipple procedure. If you want to look that up, maybe you doctors or nurses here, you know what I'm talking about here. It's pretty serious. So if you could keep Lori in your thoughts and your prayers, I'd appreciate that. She could definitely use it. Getting a cancer diagnosis is generally not something that anyone wants to experience. All right, people, with that said, again, this guy here, and I mean this with all I got. I love you from the heart. We are a team. We are a family. Um, please be safe this weekend. Take care of each other. Take care of yourselves. I will see you Sunday for my markets a look ahead segment. And it's going to be a doozy because I got a lot of work to do. I want to wrap my head around what just happened today. It's pretty profound. Anyway, people, that's going to be it. Thank you for those thumbs up. Please do something about that too. I got 1,240 people watching. I only got 482 thumbs up. Those thumbs up are so important. It gets the video shown. It lets people see the video. YouTube, says, hey, people like it. We're going to show the video. It's up to you. You want people to hear it? That's great. And I hope you do, because like I said, this is a family. We're all in this together and we got each other's backs, and that ain't no nonsense. All right. That's it. Thank you all of you so much. All right. I will see you on Sunday. As I said, take care of each other. Take care of everybody. All right. I'm out here. These people are fantastic. They really are.